Hey, what's up? It's Chris, founder of Finxter.com, and in today's video we are going to discuss the Upwork quarterly earnings call Q3 2021, which has just been released a couple of days ago, depending on when you watch the video. And we are first looking into so in this presentation, we are first looking into like the total addressable market and some statistics about freelancing. Then we check out statistics such as GSV, active clients, GSV per active client revenue, and I also give you my discounted cash flow analysis, like my valuation of the Upwork business in terms, in case you are interested in this, and some references. So it will be a quick dive into the earnings, giving you an overview of the most important milestones of the business. Okay, so first of all, let's check out the freelancing opportunity. Actually, some statistics about Upwork, and actually showing you the trillion USD total addressable market that, or TAM, that Upwork is going after. So currently we have like about 10 million Americans, and the number is growing rapidly. 10 million Americans are currently considering leaving their full-time jobs. So I mean, we already have, say, 20 million or so freelancers. Actually, I don't know how many, but I think we have like tens of millions of freelancers in the US. But we have 10 million Americans who are currently considering leaving their full-time job to gain more flexibility freelancing, right? So we have, it's not the other way around. Freelancers are usually very happy with their work. They don't want to leave freelancing to actually get employed again, right? But we have, like, it's a one-way street, right? We have many employees who not a couple of, not a handful of employees, but 10 million Americans only, right? And then we have worldwide even much more. So the number worldwide will be probably 10x that, right? So we have say 100 million people in the world who want to leave their job to become freelancers. Some of them will do it. Some of them are too fearful to actually do it. But actually, like I see it with the Finxter freelancer course that we offer, I see that many people, the interest is pretty significant, and more people leave for freelancing because of the unique advantages of freelancing. What are they? Freelancing on platforms such as Upwork is very comfortable in my opinion, because you already have the clients on the platforms. The clients already want to spend money, so they have there's a purchase intent, right, with the clients. They already bring the money to the platform. They just want to press a button to hire you, right? It's like being early on the Amazon marketplace or so. People just want to purchase. They want to give you money. They want to get their problems fixed. And if you just offer them, I will fix your problems, right? Then you will get your share of the freelancing market, right? So we have this market, and for clients, of course, I mean the advantages are pretty significant. So they are more flexible. They can hire or access talent all over the world. They can access the best talent in the industry rather than just accessing, say, some mediocre or average talents for life. So oftentimes you don't need exclusive access to an employee, for example, like 100% access for lifetime. This is like this is the current work model, right? And of course it's antiquated. I mean just locking in the full-time work capacity of a person for life, and actually creating a contract that actually like satisfy this. I mean, in a world that changes rapidly, this is just not. It's just not. It's just not working anymore in such like in dynamic times, right? And also you see it with the younger generations. Often, if you want to see the future, just look at the the younger generations, right? So, for example, 50%. 50%, this is half of Gen Z talent pool, actually they choose to start their career in freelance rather than full-time employment. Okay, so this is 50%. And if you just like look at some other statistics, Upwork did a great survey asking what best describes how you feel about being required to return to the office after the COVID situation. And most of them are not excited about returning to the office. This is like more than 1/3, right? And about 50% have mixed feelings, or 40% plus have mixed feelings about it. So those people are potential candidates to become freelancers. And this is actually the majority of the workforce. They actually don't enjoy their work, right? No big news here. But most freelancers actually enjoy their work. If you look at some other statistics, there's a McKinsey report about independent work. You can just Google it, or you can check out the Finxter summary as well. I will give a link in the description. If you check out those reports, they prove that freelancers are happier. They are more satisfied with their work. They enjoy doing the work. They can work from home, and they are like they can work in jobs they enjoy working in. Right? They can just focus on one skill they have and they enjoy doing, one activity they enjoy doing, and one skill they have. Focus 100% on this skill. Build this skill to a super high level, and just ignore the rest. Right? And just sell the skill on a global basis on the marketplace. It's very, very simple strategy and very efficient strategy too. Much more efficient for the world, for collective intelligence, right? To actually broker the talent in that way, because now we can have hyper specialization in a freelanced society. Okay, so and you see like another statistic from the Upwork quarterly earnings report is freelancers contributed $1.2 trillion to the US economy in annual earnings, which is a 22% increase since 2019. So this is like a big macro trend, and it's not coming to a halt. It's a big macro trend that actually affects every single person in the marketplace, right? I mean, this is a trend you cannot actually ignore. So it's a big shift in how the world is organized and how freelancers are actually perceived in the what is the how perceived by the employers, right? So many employers would rather now hire freelancers than employees for life, right? So another statistic is, of those who quit their full-time job in order to freelance, 75% say they earn the same or more in pay than when they had a traditional employer, right? And this is also I know this from the Finxter Freelancer course, which I will also give a link in the description below. That like the average freelance developer coder in the US earns $51 to $61 per hour, which is like a great hourly rate, right? If you work, say, 10 hours a day, if you are really ambitious, then you can make $500 per day, right? This is just if you get the average earnings of a freelance developer. So if you are really ambitious today, and if you are really a smart individual, I would say like a Southern Individual. It's actually a great book. You should check it out, Southern Individual. So if you're a Southern individual, you can actually get your share of the world's pie, right? Today's, and it's in your control, and that's why actually so many people flock into the freelancing opportunity these days. Okay, so let's check out some statistics in Q3 Upwork. So Upwork is the biggest freelancing platform in the space. You also have Fiverr. Fiverr is growing rapidly, but Upwork is still the largest one in terms of cross service volume. What is cross service volume? Cross service volume is just the amount of money that goes through the marketplace. So if clients spend $100 on a freelancer or $1,000 on a freelancer, then those $1,000 is counted towards the GSV, cross service volume, right? So this is just the amount of money that goes through the Upwork marketplace, and you see it grow significantly from 2019 to 2020. It grew 21%, but now like year over year growth from this quarter Q3 to 2020 to 2021, we have a growth rate of 38%. So it is not only growing significantly, right? 20% growth would already be a disruptive growth rate if you could sustain it for a decade. And actually, Upwork already sustained it for the last decade. But the growth is accelerating. You see, like from 21% growth rate to 38% growth rate. So we have like a significant growth rate of the money that is channeled, that is going through Upwork. And there must be a reason for this, right? This is not a fad. Businesses spend more and more money on Upwork, and you can see this in the following statistics. So where does the GSV growth come from? We have actually the number of active clients in 1,000 is 752,000 active clients. So we have more clients. So in the last couple of quarters, we have like a significant growth. Year-over-year growth rate between 20 and 30%. And so we have more clients coming to the platform. But then we also have GSV per active client is positive. So which means that actually we have a positive client spend retention. So we have more, the clients who already are on the platform spend more and more and more every year, right? Even considering that some of the clients leave. so that we have a certain churn rate. So a certain percentage of clients actually check out the platform in 1 year and then they never spend again. So considering this, we still have positive client spend retention. So the clients that stay on the platform and spend more in a given year than in the previous year actually overcompensate the losses of the clients who spend in 1 year and never come again. So which means that even if Upwork wouldn't grow in terms of number of active clients, so even if this one would be flat, it would still grow because clients on average spend more and more money. The existing clients spend more and more money, which is like, I would say, if you have a business with this kind of retention, you must be onto something, right? Because now they don't even need new clients, but of course they get new clients because of the big opportunities. So and they have actually this double effect that they get new clients and the existing clients spend more and more and more in a given year, and which means that like this is completely, in my opinion, a completely disruptive a global macro trend. Okay, so and let's check out the revenue. So every business, I think, the top line. Money they get, like for any business, is the most important number in my opinion. You see the revenue grew from 2019 to 2020 by 24%, and so the year-over-year growth in the most recent quarter that is just now released, like yesterday I think it was released, you see that we have now a year-over-year growth of 32%. So again, revenue growth is accelerating. So this is like this can be, and you see the total addressable market is $1 trillion market. We are still very early here, right? So we have the marketplace revenue in the most recent quarter is 118 million. So we are in the million, not even in the billions, right? So it's still relatively small, but it grows significantly. It grows into the big pie, the big economy, and there's no upper limit, right? Almost no ceiling. It's like the global talent, the global marketplace for work. This is the upper ceiling, right? So let's dive into a discounted cash flow analysis that I actually did with Upwork. I mean, this is just my own opinion. It's not financial advice, obviously, or anything. It's just I want to share you so how I view this business. So here I actually did a discounted cash flow analysis. What does it mean, discounted cash flow? So you can value a business by just counting the cash flows into the future, right? So a business creates cash flow, and cash flow. So for example, here in year 2000, here's like in this column we have the years, and in year 2015, Upwork had sales of 150 million, and then it grew by 9% to 164 million, and now we are in 2020. We have sales. In 2020, last year, we had sales. Like this is like the sales revenue, $374 million, and now expectedly, so considering the newest quarterly numbers, we probably have like almost 500 million in revenue on an annual basis. And and now I just like, this is a 33% growth rate compared to last year's, and now we just like these are our sales numbers, right? And now we need to assume that we create a profit and we have a net margin. Currently, Upwork is actually burning a lot of cash. Why is that? Because they reinvest everything in growth, right? And people don't see it actually. So many people don't see the value of Upwork yet because they are at a loss, right? Initially, like Facebook, Amazon, or like the biggest companies who had money to reinvest, who had a very positive return on investment on money they got into their business. They of course spent everything. They didn't like, if they had say 10% net margin, so like say they made $1 billion and then they had 10% net margin, so you have 100 million USD in profit. Then you could either reinvest this profit into the business, or you could give it out like paying dividends to the shareholders or something, right? And if you have a good way to reinvest the money into the business, then you should do it, right? I mean, it wouldn't be rational not to do it if you, for example, could generate a 20, 30, 40% return on investment on an annual basis on this reinvested money, because this could be a growth engine. And if you didn't do it, another platform, another marketplace, such as Fiverr, would come and spend everything they had and grew their revenue faster than you were, which means that they would ultimately win, right? And this was the exact strategy Jeff Bezos did in the last 20 years to build the largest company on earth, Amazon, right? Or one of the largest companies. So it wouldn't be, so people actually always look at the earnings multiples and everything, but I think it doesn't make a lot of sense for growth companies to look at the earnings at all, because you just need to look at focus on the revenue, and then of course you need to have a profitable business. But now I mean, to figure out whether you have a profitable business, you should argue from first principles, and first principles here is that Upwork is a marketplace. So the overhead actually so say they have the largest marketplace on earth, and now they double the revenue. Say client in a given year spent double the amount of money on the marketplace. The costs of maintaining this marketplace wouldn't double as a result of this, right? Which means that they become more and more efficient the larger they get. Therefore, they should focus everything on getting larger, right? Generating more revenue, and not like generating a profit that is paid out to the shareholders, because if you would do this, you would actually lose in a competitive environment. So the biggest marketplace will be the one, if they have generated a mode that is large enough, that is big enough, then actually the biggest marketplace gets all the profit. And you see it on Amazon, you see it on like Google, you see it on Facebook and all these traditional big tech networks. You see like the biggest ones, they have very high net margins after they have created this growth engine, after they have ridden this growth engine for decades, right? So to actually grow significantly. And you see like Upwork is one of those platforms. They grow by 30%, and now just assuming that they keep growing for 10 years, which I would say is not, it's a very conservative assumption. So actually we have seen revenue accelerating in the last couple of years, but now I assume that revenue is not accelerating anymore, and we just keep growing by 30% for only 10 years. So why can I assume this? I mean, this is just looking at the total addressable market, which is far bigger. So it could grow even faster. Looking at the advantages of Upwork compared to traditional work. So the number one expense of businesses in today's world is people, right? They need to spend money on their employees, and everything that can be done more cheaply and more flexibly with bigger talent, like it or not, will be done by the businesses. And Upwork and actually freelancing is one of those opportunities. And this just assume everything persists for only 10 years. And looking at the history, right, like the last 10 years, actually Upwork managed to accomplish this type of growth rate. So say we keep growing like this, and we over time, as we grow, our net margin approaches 25%. These are just some like basic assumptions. I think you could even assume 35%, right? And this is like where different people could come up with different numbers in their discounted cash flow analysis. So, but now let's for now assume that we converge to 25%, and then we have like a steady state growth rate of 2%, which is kind of inflation. It actually doesn't even beat inflation. So this means that over time, like Upwork doesn't even grow anymore after year 12. I think this is even a very pessimistic assumption, because if you look at companies such as Facebook and Amazon and Google, they keep growing even after they have become very profitable and have created a high net margin. Okay, but we don't even assume this to remain conservative. And now you see here's our profit, right? And these are the future cash flows that an owner, like a 100% owner of the company, would actually get on a yearly basis, right? Here, for example, in the year 2021, they would get $9 million in profit. In the year 1, they would get 33 million in profit, and so on, until in the year, say, 20, they would get 2.7 billion in profit. But of course, these profits are highly unsure, right? So therefore, I have like discounted the profits back using a 10% discount rate. So this assumes that you could actually invest your money for this assumes that, so if you would like to get a 10% return on investment on this Upwork investment, then you shouldn't pay more than 10.9 billion for Upwork, assuming these statistics actually pan out. So the current market cap of Upwork is 7.8 billion, right? So assuming that you pay less than 10.9 billion, which is the sum of the discounted cash flows, and actually I have also even done something that is not usually done with discount cash flow analysis. Is I call it the existence probability, assuming that there's a 1% failure that the company just stops existing. Because if a company stops existing, then of course you don't get any cash flows into the future, right? So because as soon as it stops existing, there's no future cash flow. So, and I think many discounted cash flow analysis actually don't do it. They just would increase the discount rate. But I like to do it to remain more conservative. So I assume we have a failure probability of 1%, which means that we have an existence probability after 10 years of 90%, and then I calculate the expected present value, as it is in the year 0, it's just the profit in this given year, because you have a 100% existence probability. But now in the year 2, we actually discount this cash flow by 10%, and then we also consider the existence probability of 99% to obtain the real value, the today's value of this future 30 million cash flow. The today's value is 29 million. And then you actually no, this is the present value. This is the profit. So we first go from the profit to the present value. So this assumes that we have a 10% return on investment. So we could, if we would pay 30 million for this cash flow in a year, then we could either pay it for Upwork, or we can purchase something else that gives us 10% to obtain our 33 million profit. Okay, so and this actually reduces the value of the future cash flows. The more into the future you go, the less value it is, because you could alternatively, a future cash flow is not as valuable as today's cash flow, because you could invest today's cash flow into something else, like the S&P 500 and ETF, or something that gives you 10%, and obtain this future value of 640 million USD. So if you would invest today 328 million, you would in 7 years get 640 million as future cash flow. And if you found a vehicle that gets you 10% discount rate. So this actually means that this is the demanded. So you should know yourself what is the discount rate you demand. So what is the return on investment you want to have? And if you want to have a 10% return on investment, then you should not pay more. Actually, this number is just the sum of all cash flows here, right? So you see, if you go into the number, it sums over the DCF value, sums over all numbers from I13 to I65, which is actually all these numbers, right? So the result of our summed future cash flows is 10.9 billion. So if you would pay less than 10.9 billion, actually, our chances are, if those numbers pan out, that we get 10% return on investment. So if we would pay actually this amount. So if we would pay less, of course, say we paid only 5 billion for this, then we would get higher return on investment, right? More than 10%. And if you would pay more than 10.9 billion, we would get less than 10% return on investment. Actually, I think, so why is the discount rate 10%? It's very conservative to set it to 10%. So many people would say, okay, we should maybe set it to, say, 7%, which is or 8%, which is the average return of the S&P 500, our alternative investment. So if you would be satisfied with an 8% yield, annual yield, then we could actually pay 15 billion for Upwork. But then, of course, we needed to have a margin of safety, because it could be that it actually doesn't pan out our investment. So therefore we should be sure we should pay less in order to have a margin of safety. Okay, so but actually what I often do is I set this discount rate to 15%, which is kind of significant, very, very, very conservative. Why is that? Because I think if you look at the monetary supply, it grows by 7 to 8% per year already, which means that, in my opinion, we have an asset inflation of, say, 7 to 15% already. So everything that gives me less than 15% isn't significantly expanding in value, in my opinion, these days, because we have like the government prints so much money. So if we would assume a 15% discount rate, we get actually discount cash flow value of only 5 billion. So then we could only pay 5.3 billion for Upwork, for the whole company, if you would purchase the whole company, to get a 15% yield. And and again, if we set it to 10%, we could pay 10.9 billion. So we have like a value between 5 and 11 billion to get between 10 and 15% return on Upwork, right? So if you would pay between 5 and 11 billion, actually this is where we currently are. We are at 7 billion. So I think the marketplace values Upwork quite rationally, in my opinion. It values Upwork like I did, with like optimistic. It is optimistic, like 10-year growth rate of 30% is optimistic, but it's actually not too optimistic. It's not like we assumed like 20 years we grow by 50% or something, right? We just assume the growth rate actually stays content for a certain time, and then it pans out, right? I mean, you could also, like, if you assume 10% discount rate, we could also assume that the growth rate reduces over time. So we have 24, 21, and then we have, say, 19%, and then 16%, and 15%, and then 10% growth, and say we have 3 years 10% growth, and then we pan out to go to 2% growth. Okay, so if this would be more realistic for you, I don't think it is, actually. It is not only like, this is more pessimistic, right? But if this would be your scenario, then of course you could assume we have a discounted cash flow value of 5.1 billion, assuming a 10% discount rate and 1% existence probability. So 1% like death rate or failure probability of the company. So this would mean that if you would only pay 5 billion for this, then this would mean that Upwork is overvalued, because the current market cap is 7 billion. Okay, but I mean, you should play with the numbers yourself. You should do your own analysis, obviously. So in my opinion, so if I want to give you my numbers, actually, I would assume that we actually keep growing by 30% for 10 years or so, and then we go into 2% growth, steady state growth, which is less than inflation rate, and I would actually take like a, say, 12% discount rate, and this would give me a discount cash flow value of 9.6 billion, assuming that I want to grow my investment by 12% per year. And so if I paid 9.6 billion for the whole company, I would get my 12%. And I mean, there's some margin of safety already there, right? If I got fewer cash flows, then I wouldn't maybe get 12% return on investment, but 8%, which is actually fine as well, right? It's not like it's not beating inflation or so, but it's also not like losing money. And 9.6 billion, and as I said, Upwork is currently at 7 billion, so I should maybe update this. Like, it's currently 7 billion, the current market cap, so which actually means that we can buy it at a discount. And actually, we can now try the discount rate, changing the discount rate to actually come up with a discounted cash flow value of 7 billion. So if we would do this, we get like 13%. Let's increase it even more, 14%. Now we are at 7 billion, right? So now you see the discounted cash flow value is 7 billion, and the current market cap is also 7 billion, and we assume a discount rate of 14%. So if we are right with this scenario, then we would get a 14% return on investment in the upcoming 30 years or so by investing in the Upwork stock. Of course, I mean, we could be wrong. There's always a risk. There's always a failure. It's just like your guess is not worse than my guess. I mean, everybody does their own guessing work. This is actually the beauty of investing, right? You have collective intelligence trying to figure out the value of something. And but I think, so overall, the market values Upwork pretty rationally with 7 billion. It's like, even, I think it could be a good opportunity if you would like to have a high, a certain probability of 14% return on investment. In my opinion, it would be a high probability. Okay, anyways, so I think, so now we discussed everything I want to discuss. We have had a look at the cross-service volume. We see cross-service volume growth is accelerating. It is not even at 30% as we assumed in discounted cash flow analysis. Is at 38% growth year over year. Active client is increasing. You have client spend retention increasing, so it's like it's a great business. And we have decade-old growth trends. We have revenue increasing by 32%, not even 30%, and the discounted cash flow analysis gives me like a pretty, like say 14% return on investment. If you would purchase Upwork at today's prices at 7 billion, I would get like a 14% return on investment for the upcoming decades if I'm correctly, if those guesses are correct. And if not, the return of course would decrease. And yeah, these are the references. You can check them out yourself. You can get your own opinion on those matters. But I think Upwork is currently a great opportunity to actually invest in. And I also think that Upwork is a great opportunity to. Upwork is also great for freelancers, right? Not only for investors, but also for freelancers and for clients. I would say, like, if you just participate in the new freelance opportunity, you can have significant upside, and you can actually check out the Finxter Freelancer course. I give a link in the description below to get like a whole guide how you can succeed on Upwork as a new freelance developer without any skills. You just start with any skills you have because you are already valuable to the marketplace, right? I don't know your value. Maybe it is $5 per hour. Maybe it's $10 per hour. Maybe it's $20 per hour, maybe already $50 per hour, but maybe it is $100 per hour. There are many coders on Upwork earning $200 per hour, right? In the blockchain space, for example. So like, it is just a free marketplace. You are worth what clients pay you for, right? And the freelancer course actually gives you strategies to increase your earnings, to increase your success on Upwork, and actually gives you your first gig as well, and invites you to the Upwork platform. We are not affiliated with Upwork in any way. We are just inviting you. We just try to make the onboarding easier for you, because oftentimes Upwork will reject new freelancers and will pose an artificial barrier to entry to actually decrease the number of freelancers on the platform, to increase the average earnings of the remaining freelancers, to make it more like a more high quality platform where there's no race to the bottom, right, in terms of hourly earnings. So therefore I think it's a very, very exciting opportunity. Check out the freelancer course in the description below, and thanks for watching the video. Bye.